Hey everyone, welcome to the KE Report Daily Editorial on Tuesday, July 15th, chatting with Jim Tassoni, CEO of Armor Wealth Strategies. Chat with Jim on a monthly basis as Jim is an active trader, a momentum trader. So, like to check in with Jim to see where he is seeing momentum, what momentum he is riding, and seems like there's a lot of momentum out there in markets, metals, and even crypto. So we'll cover all of those sectors. Jim, I want to start with the markets. Recently touching all time highs. Doesn't matter what comes out of the White House or internationally in terms of geopolitical tensions, the markets seem to shrug those off. Even international markets continuing to do really well. So I do keep hearing that the markets need a bit of a pullback. There's a lot of euphoria in the markets. Fair enough. They have climbed all time highs in the face of still a lot of geopolitical tension. What do you see in these markets, Jim?
Yeah, hi Corey, and thanks for having me again. And yes, it's been a great market for a momentum trader like me the past really couple of months. And I know when we got somewhat more bullish towards mid part of May, after being pretty bearish and having it sort of jammed in our face post Liberation Day, we turned around, we held our nose, and we got much more constructive, much more aggressive, and it didn't feel good at the time, and sometimes those are honestly the best trades, the ones that don't feel good. And so now we're looking here, and again, we are hesitant to ever call tops in the market. We'd rather trail stops and see how far the markets can take us, because there's been so many times when I've tried to call a target and it's been a great call and we hit that target, and then a month later we're significantly higher than there and I don't have a trade on anymore. So learned a while back to trail stops. Right now, on the S&P, and I'll quote the futures, we're long and strong basically all equity markets across the board, and especially more on the aggressive side, the higher beta names, the more cyclical sectors, some of the emerging markets. But from just a pure S&P standpoint, we would be long this market unless we get a close below 6130 on the futures. So, 100, almost 170 points below where we're at right now. We want to stay long this market, and we want to continue to ride this trail stops if and when we continue to move higher. With that being said, I mean, are we overbought? Absolutely. Could we see a pullback? Absolutely. But we'd rather not try to make those calls. We'd rather just stay with the trend until it bends or ends, depending on what rhyming mechanism you want to use today.
Now, Jim, doesn't it feel like this trend could abruptly come to an end, though? This whole theory of the taco trade. No one's believing any of the rhetoric, the strong arm rhetoric out of the White House, but we all know Trump is extremely unpredictable and does carry a very heavy hand, a lot of power. How susceptible could these markets be to a quick drop?
Well, and I think they definitely could. And that's why, I always recommend trading with stops. I recommend, if you're so inclined and you want to put on protection. I mean, it's a little bit difficult right now just because we have the VIX trading at such suppressed levels that, sometimes protection can be tricky here. But if you want to buy it, it's cheap. So you could look at buying some protection here. I think the higher the market goes, the more susceptible we could be to Trump and the administration standing their ground, because he'll feel like he's got some cushion to the downside. When we were trading down at those early April lows, I think, as much as he may say he doesn't, I think Trump views the stock market as a huge barometer of his administration's performance. And the stronger the stock market, the more wiggle room I think he has. So the higher we go, the more likely that they stand pat at one of these points, I think becomes.
Couple other factors I want you to weigh in on is that We have the big, beautiful bill that just got passed. That seems like a big spending bill here. And as much as Trump is pushing on the Fed and Powell to do something, it almost seems like he took it into his own hands with the spending out of the government. How much is that spending bill a catalyst for the markets to the upside? And what's the potential of the Fed also being a catalyst for these markets?
I think it's at least a catalyst in the short term. I think longer term, it remains to be seen. And one area that I think is really going to be in focus, both with the Fed and some of these fiscal policies and various things surrounding the big, beautiful bill, is going to be the bond markets, and especially things like the TLT, maybe even the 10-year, the 30-year. I think we need to watch those because I think there's a couple things going on here right now. And we've been somewhat negative on the longer end of the curve and even shorting the TLT at various times, and we're currently shorted as well. But I think you've got a situation where you could see rates stabilize to higher into the back half of the year. But the one thing, if you look into 2026 with regards to the Fed and some of these policies that I don't think is priced in yet, is the idea that come May of next year, in all likelihood, we are going to have a new Fed president that is going to be very loyal to the Trump administration and very loyal to their agenda. And I don't think I think while the market may have priced in too many cuts previously, I don't necessarily know that they've priced in enough cuts for 2026, especially the second half of next year when you look at the Fed funds futures. And so I think if you want to look out, zoom out a little bit and take a longer term perspective, at some point there is going to be an opportunity to buy, I think, the shorter end of the curve, because I think we're going to get more cuts than anticipated heading into next year. So from that standpoint, I still really like either avoiding and or shorting for now the longer end, but starting to accumulate 2 year and shorter duration on fixed income. I think you could see a move higher on those bonds when we get more than forecasted rates in the back half of 2026. So that's something Fed wise. That's a trade that I'm looking at and starting to accumulate.
Okay, very interesting. Yeah, people aren't really talking or looking that far out, but you are right. Whoever comes in after Powell, you assume he's going to be very friendly to the administration. Let's talk subsectors of the markets then. Where are you focused? Where do you see the best upside?
Yeah, I still, from a sector standpoint, we're very much cyclically based right now and more aggressively based, higher beta names, growthy names. Sector wise, that'll take us to communication services, technology. We do actually still like consumer. We like consumer discretionary here. I think you need to be a little bit more selective there. I don't necessarily know that I would just go out and buy the index. I've got to be careful talking individual names here, but I think you can be in the consumer discretionary sector, and I think there's opportunities there if we see this market and economic conditions continue to ramp, which for now we don't see any reason why that shouldn't continue. We do actually still like financials and real estate here too. So those are the five sectors that we're overweight and or favoring versus some of the more defensively natured sectors.
How about international markets? Because as well as the US markets have done, international markets, I believe, are still outpacing the US markets. And even this last Liberation Day 2.0, if we want to call it that, the tariffs that were announced on a couple countries, I noticed those markets were flat to up. They didn't respond either. So, any opportunities internationally you're seeing?
Yeah, we still really like a lot of these international markets. We're probably more overweight emerging markets than developed markets at this point. Again, with our tilt towards being a little bit more aggressive since mid-May. Continue to hold long positions in the India ETF, in the FXI, the Chinese ETF. We had a nice long in Brazil, EWZ. We just recently, I think actually yesterday, got stopped out on that trade. So that's one that we're no longer in, but had a nice long. Your home country, and we had a nice trade on this one that we got stopped out about a week or so ago on the Canadian EWC. Wow, what a bounce off of the Liberation Day lows that ETF's had. That's just been up and to the right. So there's a lot of opportunities out there. I mean, Europe is still strong, but we are tilting and favoring from an international overweight standpoint towards emerging markets over developed right now.
Okay, let's also move over to the metals then, because boy, oh boy, commodities have really taken the spotlight here. They have done very well, and we've actually seen a bit of a rotation away from simply gold that seemed to be leading. Now it's some of the smaller markets, but also copper. But let's start off with silver, because silver has played a lot of catch up to gold. Last segment, we talked with you back in the middle of June. You outlined some targets for silver of 39 to 40. Silver pretty much made it there. It's pulled back a little bit. What's your outlook for silver here?
Yeah, I mean, we still see kind of upside resistance here, right where we kind of stopped last time. We see that 39.57 high that we made a few days ago or yesterday, I believe actually, as an area that we ticked up to, pulled back from. Let's see if we can resume some strength and possibly push above that. If we can get a close above that now, that high of 39.57, I think we could see another leg higher in this trade. We're still long. We've got our stops in at 36.30 right now, so we're just going to go ahead and see how it goes from here. It's been a great trade. We've already got a profit booked in here. We like silver. Silver miners have been an even better trade for us, the SIL ETF. We've been long both of those, and they've been doing well for our investors. So we'll continue to hold those until we see this trend breakdown.
So I'm curious, as a momentum trader, when you look at something like silver compared to the silver miners, what do you like to see leading? Or do you even do any of that kind of inner market analysis outside of simply seeing momentum and riding it?
You know, I think for me, it's more about position sizing, whether it's, gold with the GDX or silver with the SIL. I think you tend to see more obvious beta from the miners than you do from the underlying commodity. And so we tend to size our ETF miners positions about half the size of our actual metals positions. But we like to just, what we really like to see, and we don't necessarily look for a leader on either side, but we like to see confirmations. If both of them are trending, if both of them are breaking out above value areas and continuing to trade, continuing to hold levels, continuing to move higher, that's a really bullish side. Conversely, if we see, maybe the silver, the metal hanging in there, but the silver miners are just breaking down, that would lead us to be a little bit cautious on continuing to hold that silver trade. So it's more that we want to see confirmation from the two than seeing one or the other lead, because we think there can be catch-up plays both ways.
Okay, let's move over to copper then, because out of that Liberation Day 2.0, copper was a big winner. Again, it seemed like most of the markets ignored what Trump had to say, except for copper, which shot up over 550, pretty much consolidating around that level right now, too. We're not seeing an immediate sell-off in copper. What's your takeaway from copper's move last week and now where it could go?
Yeah, we got long copper in the last week in June, June 25th. We signaled a breakout. And we had no idea that we were going to get these announcements and this thing was just going to explode. But again, sometimes it's better to be lucky than good. So we were into copper at about 490 and we continue to hold it. We've got our stops now at 497. So again, locked in profits. We're seeing some consolidation. I think you brought up a great level. That 550 level is definitely a point of control. We want to see it continue to hold above that level. Don't want to see closes below that. I think if we saw closes below that, we gotta start watching that $5 level as a check back. But for now, if 550 holds, I mean, we think you can make another run up. We've got sort of a resistance level starting to form at 576. I think if we can get a close above 576, we could make a run at that spike high. So we'll see how it plays out.
All right, let's talk about oil then too, because oil has not really done much, but at least it has climbed back from some of the lower levels it was at and that breakdown that it had back in April, May. Now it's trading mid 60s again. Kind of boring, quite honestly. And in the lower part of this range it's been in for 2.5 years. What's the play in oil? Is oil going to join in with this commodity rally?
Yeah, I mean, this has definitely been a more difficult trade than some of those others that you've been able to jump on and just ride. We had a decent trade in oil back. We talked, I think, the last show or the show before that. Made a decent profit on that trade. Saw that spike up around the geopolitical tensions, and then obviously the drop right back down with the Israel-Iran situation. I think we pointed out that we're sort of in a range right now, and our range call is about 73.40 to about 64.90. And so I think if you want to play that range, there's opportunity right now. If you want to look to buy at the lower end down around 65, which is what we did, as long as it holds 64.90 on a close, I think you're okay. And then we'd probably look to, at this point, at least take some profits up near, 73.40. We maybe wouldn't take the whole trade off, but we just don't see enough momentum in this trade to really want to ride that thing all the way up. We think it's more prudent, probably at this point, just seeing what we're seeing to play that range.
Okay. Another market that we should touch on, Bitcoin. Whoa, Bitcoin just went through a big move up over 120,000. Has given up a little bit of that, but look, Bitcoin, very supportive administration in the US, and now there's this whole narrative of tokenization. So, seems like there's a lot of catalysts for Bitcoin, but again, it went through a pretty big price increase. Bitcoin is volatile. What are you playing in Bitcoin?
Yeah, this is another one, Corey, where I'd probably be better off just owning a small allocation in my portfolio and just leaving it alone. Trading this thing is great, but it always leads to a lot of FOMO and a lot of, fist pounding because you think you make a great trade, and I've been doing this for years. I mean, I can remember 10 years ago buying Bitcoin at 3,000, selling it at 10 or 11,000 and thinking I was a genius. And now you look back and you say, God, why didn't I just hold this thing? But with that being said, we did enter another trade right around 106,500. And that was another one of these plug your nose and buy at the 106,500 level. I thought we were probably buying the top, but like you said, here we are, the run up above 120,000, still trading up here above 115,000. We've got our stop in now at 107.6, so 107,600 is our stop. So we're going to be at least profitable on this trade. We think if we can hold that level, who knows? I mean, I think there's some resistance starting to form now up at that high that we made a run at. We see it at like the 121, 500 level as the next key resistance point to get a close above. You get a close above that there, who knows? I think we're off to new highs and then some.
All right, Jim. Sounds like still a lot of opportunities out there. Hey, this is a very risk-on market that I don't think a whole lot of people were expecting a few months ago when we went through that pretty quick drop. But, well, we're back at all-time highs. A lot of other markets are doing well. And the commodities, we've seen a pretty interesting and I think significant shift towards commodities that who knows how long it's going to last, but that is also a sector getting a lot more attention. Again, Jim Tassoni, CEO of Armor Wealth Strategies. Click the link in the show notes to follow along with what Jim is trading. Jim, great chatting with you this month. We'll chat again in August.
Thanks, Corey. Have a good